Hello everyone, Clifford Bennett, Chief Economist at ACY Securities, and yet another weekend has passed and I hope you enjoyed it. We've started the week with China cutting its LPR rate, that one-year rate, lending rate, to 3.45%. It's a new low, and it does show that the Chinese are doing something to support their economy. They want to stimulate economic activity, but by leaving the 5-year on hold, they've indicated that they're not really about rescuing the property market or property investors at this stage. They're more about giving the economy a soft landing and getting it going again. That's in stark contrast to what's happening with the ECB and with the Fed, who show no signs at all of wishing to support their economies. And this is what worries me, because the administration keeps saying the US economy is strong and a beacon to the rest of the world. And this just isn't so, because it is slowing. So I'm expecting really Q3, Q4 economic growth for the US to be somewhat surprisingly soft. And this will begin to ring some alarm bells, but any kind of policy or interest rate response for their weakening economies in either the United States or the EU is unlikely for a very long time, at least probably mid next year. So still a year away, and yet their economies are, I use the word dysfunctional and people think I'm a little bit harsh in using that word for the US economy, but there's all sorts of things going wrong there. You know, the hollowing out of cities, it isn't just work from home, it's high crime rates and things like that. And you have both a commercial and a residential property downturn happening at the same time. You have manufacturing in recession. How can that not be called dysfunctional? So the US economy has problems that are not being attended to. China has problems that are being attended to. And I think that's an important distinction for your 1 to 3 year outlook here. So the Chinese economy also, it doesn't look like it has the airport in sight yet, as I think I said last week, for a soft landing, but eventually, hopefully it will find one. But at least we know the government and the PBOC are interested in stimulating growth, unlike the EU and the US. We've continued to see equity markets fall, and they've had a big fall now from their recent peaks. As we have been warning all along, defense was the best strategy. There's no change in that sort of idea at the moment, that scenario, but I do think there could be some market bounce this Monday. If there's no market bounce in New York tonight, then that's really worrying, because price action would suggest that the market should be oversold here and it should begin to have some sort of upward correction. So yes, upward correction, which means I'm still thinking the trend from here is going to be to the downside. We may have entered a 3 to 6 month or a 12 to 18 month downward pressure trend in US equity markets. P ratios are actually above average when they should be toward the bottom of their range, given the Main Street environment. So Wall Street remains stretched from Main Street, and I think Wall Street has to lick its wounds and have some downside here. So still very cautious on equities. The US dollar remains firm, and I think it probably has more upside, but it has upside based on fear, not on the US economy doing well. And as I've said before, that fear can be global investors wanting to open bank accounts with 6 banks in New York, because then they get all of their cash reserves guaranteed by the Federal Reserve. And it can be big corporations bringing money back home. As I said in my note today, the price action of Apple and Tesla is pretty much what I've been suggesting for quite some time, and it is to the downside. Again, Apple in particular should have some sort of bounce here. So if by this time tomorrow we haven't seen a bit of a bounce for the equity market, and even if we see a bounce, I'll be a seller of that bounce. But if we don't see a bounce this Monday trading session, that would be get really worried signal. So there's a lot going wrong. and it's not in the market headlines. So that means there's still plenty of opportunity here to the downside. It won't be until the front page of the general newspapers are talking about stock market collapsing that we will see a low shortly thereafter. We're nowhere near that point. Most of the mainstream financial media at this stage are really still talking about, oh, there's some downside, there's some volatility, blah, blah, blah. No, there's real things wrong here with the global economy, with the three biggest economies in the world, and this will begin to show up almost violently, I think, in the US equity market over coming weeks. I hope that helps you. Have a great week. Clifford Bennett.